we got the numbers. Just remind us how much they're cutting and what sort of number we're now looking at for a valuation of Twitter, now X.
Yeah, I believe the cut from the end of November, I think it was around 11%. But in total, more than 70% of the value has been cut down since the close of the acquisition. Now, you will remember that was a $44 billion acquisition at the end of 2022. If it's been cut by more than 70%, we're now looking at a company that at least Fidelity believes is valued closer to $12.5, $13 billion. And so, to put that into a little bit of historical perspective, you may remember, Caroline, way back in 2016, Twitter almost sold to Disney, almost sold to Salesforce. The company was around the same value way back then in 2016 as it is today per Fidelity. So, we've just seen a huge erasure of value from X since Elon took over.
The curious thing about this is that Fidelity is one of the investment firms that participated in the take private deal in the first place. Behind this, I guess, we don't know the factors behind Fidelity's decision or how they arrived at that valuation. But you've done some reporting on how the financials have changed in the last 12 months.
Yeah, we talked about this, Ed, if you'll remember, right before the new year, right? We had a story come out on Bloomberg that the advertising revenue at X is projected to be, somewhere around 2.5 billion. And that may even be on the high side, right? Because some of these predictions were made earlier in the quarter before Elon went on stage at DealBook and started swearing at Twitter's advertising partners. And so, the value of Twitter's business, the size of Twitter's business has just decreased so much. Even just a few years ago, before Elon showed up, they were bringing in more than $5 billion a year, most of that in advertising revenue. We're now talking, about half of that. And a lot of this is quite frankly self-inflicted, right? A lot of the issues that they've had seem to be things they could have avoided with, some different approaches, I think, to the advertising business.
And to that end, self-inflicted wounds as they are, does ultimately it bother the management, the leadership of the erosion of value? It might well bother some of the partners who went in on the deal to take private. But ultimately, is there much real pressure being put on turning this company around and building back its value?
Well, they're in a unique position, right? And not only are they not a publicly traded company, but a lot of their investors are sort of investing in Elon Musk. And X might be part of that investment, but they also want to be involved with Elon when it comes to SpaceX or Neuralink or Boring Company or whatever types of things he does, right? And so I think there's a lot more patience from the people who invest alongside Elon Musk because they see the bigger picture, right? And they say, okay, maybe we are losing some money on our X investment right now, but the relationship that we built with Elon, the support that we're giving him on that side will pay off in some of the other businesses that he runs, right? At least that's how it's working right now. Now, I don't think there's going to necessarily be a willingness to just continue to run this into the ground over time, but I think he has a little bit more runway than most companies would in this situation because of all the other businesses that he has.